Hello and welcome to the week ahead video with me, David Madden. Now before we take a look at the major events of next week, let's just take a quick recap of the major events of the week just gone. Yesterday it was announced that CPI in the US hit 7.5%, its highest level in almost 40 years. And the rise in CPI in turn pushed up US government bond yields. The US 10-year yield hit 2%, its highest level since July 2019, and there's a lot of increased speculation that the Federal Reserve might look to hike interest rates several times, and the chatter about the possibility of multiple rate hikes from the Fed this year put downward pressure on stock markets, particularly on technology stocks, and in turn here we can see the US500 came under selling pressure in the past say 12 to 18 hours. We can see now that it's back below all three simple moving averages, and while it continues to hold below those metrics, it's likely the near term negative trend will continue. Looking at the MACD indicator, we can see that momentum is in negative territory, which suggests the bears are in control. If you do see further declines in the US 500 from here, support might be found from this area at 44.03. And a break below that could see a target this zone here at 42.74. Now, even though the short-term trend has been at the downside, it's worth noting the more medium-term trend in the last few weeks has been to the upside. If you do see continuation of this more broader upward trend, we could see resistance come into play around here at 46.01, and a break beyond that could target this area here at 46.79. Now, I mentioned the high level of inflation seen in the US this week. Next week we have inflation figures, CPI figures from both the UK and Canada, and high inflation has been a hot topic for central banks around the world. On Wednesday we have the latest reading of UK CPI. Keep in mind currently CPI in the UK is at 5.4%, its highest level since the early 1990s. We can see here that the GBP USD in the more medium term has been pushing higher in the last few weeks. Yesterday we saw a lot of volatility in the US dollar because of the high inflation figures, which led to quite a wide range on the session. But we can see here GBP USD in the last few hours has been moving lower, largely because of the strong US dollar. We're trading we're trading in around all three of these simple moving averages. We've managed to just about get back above all three simple moving averages. If we do manage to hold above these metrics, it's possible the more medium-term upward trend could continue. A rally from here could see us look to target this area here around 1.3688, and a break beyond that could target this zone here around 1.3749. Now it's worth noting we have been trading in a fairly small range in the last few hours, and the lows of this morning have actually taken out the lows set overnight. So if we do see a continuation of this very short-term downward trend in the currency pair, support could be found from this zone here around 1.3489, and a break below that could see us target 1.3441. Now, not only do we have UK CPI on Wednesday, we also have Canadian CPI on Wednesday, and CPI in Canada has also been on the rise. At the most recent reading, Canadian CPI hit 4.8%, its highest level in 30 years. So once again, there's a common theme here: high levels of inflation in the United States, the UK and Canada. We have seen a decent move to the upside in USDCAD, largely driven by the fact that the US dollar itself has been strong. We can see here that the dollar CAD is holding above all three simple moving averages, while it continues to hold above these metrics here, these three moving averages. It's likely the more broader upward trend will continue. A rally from here could see it retest the highs of late January in at 1.2795, and a break beyond that could see a target this zone here around 1.2846. If we do see any moves to the downside, because let's face it, we have seen some sharp moves lower, such as the lows that was set yesterday. If we do see a move lower again, we could look to retest yesterday's low in around 1.2635, and a break below that could see a target this zone here around 1.2558. Now finally, also Wednesday, we're going to have the Fed minutes, the minutes from the latest meeting where the Federal Reserve, where Jerome Powell at the press conference didn't rule out the possibility of having 7 interest rate hikes this year. Now, when the press conference was delivered in mid to late January, the Fed funds futures market began to price in 5 interest rate hikes in the Federal Reserve. At the meeting, Mr. Powell, the chair of the Federal Reserve, did rule out the possibility of hiking interest rates 7 times. So traders are going to be listening out for what can we expect potentially from the Federal Reserve this year. That's all from me for this video. Thank you very much.